Abhishek Somany, Managing Director and CEO with us this morning. And he, of course, thank you, Abhishek, for speaking with NDTV Profit first up. So, Mr. Somany, let me just start by addressing the numbers and the fall that we've seen in volumes, the fall that we've seen in profits and margins. Some of this because of higher employee costs, of course. But if you can take us through your rationale of the numbers that we've seen this quarter with Somany Ceramics.
Yeah, first of all, I would like to correct there. I don't think there's been a fall in numbers. We've been able to grow by 4.5%.
I'm referring to your net profit, sir. I'm referring to your net profit, which is 58% down at 9.3 crores versus 22 crores. So those are the numbers I'm referring to. Of course, your revenue has grown up 5%.
We did have two JVs which have gone off, so there's an exceptional profit on the loss in that. But otherwise, our margins have remained the same. It's at 8.4, and last quarter was 8.5%. So our margins haven't dropped, although there's been a muted demand. We've been able to hold on to that because it's a better value-added sales, and also we've not bought any sales, so our balance sheet is in check. So from that point of view, I don't think there's a serious impact. As far as the staff cost is concerned, it all depends on, we've not hired any more people, but it's just that the sales volumes are low. We have readied our staff for a much larger volume, and that has not come through in the last 2 quarters. But as and when that comes through, I think this will start evening out from that point of view. So in the next couple of quarters, you'll see that evening out.
So fair enough that your margins quarter on quarter have been fairly steady. But if I look at it year on year, there is a dip in margins from 9.6% to 8.3%. So to give us a sense of what is the new normal, was this a base effect playing out? Where do you see and hope for margins to go?
No, so 8.3, 8.4% is what we exited at Q3. Is clearly not the new normal. What's happened is where we added a lot of capacity and we've not been able to utilize this capacity because of the muted demand. And in the tile industry, the capacity utilization makes a lot of difference as far as margin is concerned. And that's the drop which you see. But having said that, we're probably the lowest drop in the industry. Other players have dropped much more in terms of margin. Of course, that's no brownie points to us. But the point is, like you just mentioned, this is clearly not the new normal. We should be looking at least 150 to 200 bips increase over the next year, owing to the increase in volume, which we see will happen over the next few quarters because the projects have started coming up, and hopefully there would be lesser pressure from the Morbi sector, which is the cluster of ceramics, because with the wars coming to some kind of salience, probably freight rates will go down and margin, and the exports will start picking up from there.
Hi, Mr. Somany. Morning. This is Alex joining in as well. I just want to get a sense from you on your own base case assumptions for volume increase in the next financial year, since we're more or less ending this quarter. What will you end the year at, and how much do you anticipate it will improve in FY26? What is the base case, and what would be a disappointment in your opinion?
So this year would be a couple of percent more than what we have done. So mid single digits is what we think we would be able to achieve now that, like you rightly said, the year is almost over. Next year, we're looking at high single digit, low double digit growth. And why it has not happened in the last couple of quarters is a little perplexing to the entire building material industry. But I think the front of the wall segment, with the buildings getting completion, with all the projects getting into completion stage, they should be much better off in the next year.
And in terms of, so you've already guided towards the expansion in margin to the extent of 150 basis points. But that is assuming that your input costs remain benign and you're able to maintain pricing. Any challenges to either of those that you anticipate?
Pricing should remain okay, and whatever little reduction we may have in pricing, if at all, that should be compensated by the higher capacity utilization. And on the other hand, we keep pushing for more value-added sales, which is started to pick up and will continue to pick up. As far as the input cost is concerned, our biggest input cost is fuel. I don't see fuel jumping very much. There is a little bit of an effect of the maybe 1% or 2% on owing to the dollar, the rupee slide actually. But that's a small component of the gas, the dollar component of the gas. Other than that, I don't see gas prices jumping up, and the rest of the raw material prices also I don't see going anywhere from here. So that should be under check.
Okay.
Okay, just Mr. Somany, last point from you on what is the outlook on demand. You spoke initially in our conversation about volumes which have not been as per your expectation. You're preparing your team, your sales team and all of your teams for an increase in volume. So two-part question. In your view, why has there been a drop in volume? Is this reflective of the overall demand scenario? And are you expecting an uptick soon, basis what?
So two things have happened. One is that there's been an added pressure from the Morbi sector in the domestic market, which is making the dealer a little jittery to hold on to stocks. That is owing to basically most of the Morbi sector was focused towards exports, and with the freight rates going up, they have dumped a little more of that in the Indian market. That has not affected our prices because that's a very inferior quality material, but it has put pressure on the psychology of the dealers. Secondly, on the other hand, the IHBs, the individual home owners, they have delayed their purchase or deferred their purchase. So there's an overall consumption which is lower. You can see that in the entire economy, nothing to do with the building material. Of course, the building material gets affected because it's a front-facing product. The builders, I think, also have coming to completion. The back of the wall did well in the last 2 years. The front of the wall, which is switches, tiles, plies, paints, etc., all of the building material which is front of the wall is slated to do better because all of these buildings which have been announced and sold have to get completed. Tiles remain to be the most competitive and the most preferred item for completing a building, just like a sanitary ware and bath fittings. So we do believe that this should be much, much better this year. Of course, we've been saying it even last year and it didn't happen. So not much to say on that, but we do believe that it's high time that this would pick up. And exports will only help ease the pressure in the Indian market. So both of those reasons we believe volumes would pick up.
All right, thank you so much, Abhishek Somany there, and best of luck for the next quarter as well.